Okay, well, Gary Schlossberg is now joining us, Global Strategist at Fargo Invst Institute. Gary, great to have you with us here on the program. Thanks very much for your time. What's your opinion? Global equities, Gary. I mean, the U.S. is continuing to see a lot of action, although at the margin, some are starting to say that this is starting to look very, very stretched. Are you in that camp, or you think there is more to go here?
We are. We think that the U.S. still sees a recession ahead, a moderate recession, sometime late this year or no later than the early part of 2024. There is some optimism developing on the interest rate outlook as well. The idea that the Fed is in an extended pause on its way to rate cuts. I think Chairman Powell's testimony later today or tomorrow could pour cold water on that. He'll certainly do his best to keep alive the possibility of rate increases, just to keep the market on the straight and narrow. In the meantime, valuations are quite high. Here in the U.S., the S&P 500's price earnings multiple, forward price earnings multiple, about as high as we've seen since March of 2022. So a lot riding on the testimony, but we think the chair will have the effect of cooling things down a bit.
Okay. So what does all of this mean, Gary, for a market like India? I ask because, you know, the S&P 500 is up about 15% for the year, while India has sort of lagged behind, right? I mean, we're up just about 3-4%, although a lot of the action is happening in the broader end of the market. Do you think India could take over for the rest of the year, sort of outperform developed markets? What's the sense you're getting?
Well, I think it's going to be a tug of war a bit. The fundamentals in India, as you heard earlier from one of the analysts, do look quite good. However, the international environment, slowing economic growth, the prospect of further interest rate increases at the very least by the Bank of England and the European Central Bank, with the Fed perhaps sitting on the fence but being a bit more circumspect about the outlook. These are going to create headwinds for developing markets, emerging markets generally. There's also the El Nino effect that's something of an uncertainty. So there will be headwinds ahead, but I think India should stand out among the emerging markets as one of the best positioned for gains if they materialize generally for the sector.
Gary, hi, good morning. So, just to come back to the global picture, when you say that you're expecting a mild recession in the U.S. from a market direction point, are you expecting more of ranging action for, say, the second half? Or do you think this is just an interim pause and then we see a resumption of the uptrend?
We think there will be a pullback in the market. It may be a mild one, but with the recession, putting a further dent on earnings. Keep in mind, earnings are already down year over year. During the balance of the year, I think the outlook for corporate earnings will become a bit more guarded. That should be reflected in the equity market. By very late this year, if the prospect of an economic recovery sometime in the spring or perhaps summer of 2024 does begin to take hold, you could see the market recover a bit. But we think there'll be a speed bump in the market as we enter the early stages of an economic slowdown, as mild as it might be.
Okay, and how would you describe mild? I mean, are we talking 5 to 10%, more, less? I mean, any sense of that?
Well, we are looking for a peak-to-trough decline of about 1.5%, which would place it as a moderate slowdown, similar to what we had about 30 years ago. A mild slowdown, anything less than 1% peak-to-trough. We think it'll be a bit more than that, but certainly the risks, the chances, are beginning to tilt toward a mild economic slowdown, given the economy's resilience so far and some of the positives out there. Notably, a slowing of inflation. Now, that disinflation has resumed over the past couple of months, and we think will continue through June.
All right. Well, we'll leave it at that. Gary, thanks a lot for joining in. Appreciate your thoughts here on CNBC-TV18. Let's slip into a quick break, but on the other side of the break, we'll get our list of top 10 stocks lined up in just a bit. Stay tuned.